These videos are not financial advices. Everything shared here is simply what I'm personally doing, and it's provided for educational purposes only. Please remember, you are fully responsible for your own money and your own trading decisions. Hello everyone, welcome back to another video. Today, I'll be taking a couple of trades based on candlestick psychology. I'm going to take my first trade right now. We have a very good area to enter the market right now. I will explain why. All right, I'm going to go one more. Let's go. This is a beautiful decision point. See, beautiful decision point. And you already see an overlap and this kind of activity. You can be sure that in lower time frame, we have entry for this one. This is in a spike, right? We got the retracement and the gap down in the favor of buyers. We know that the gap downs are in the favor of buyers and gap ups are in the favor of sellers. So what is this spike is causing? Okay, let's analyze this market together. The first thing we see here is this double bottom. You know that double bottom is a market structure pattern with showing reversal. Inside double bottom, we had last effort of sellers. This is the last effort of the sellers. This is exhaustion candle. Okay, I want to analyze the market in a way that you can understand the movements. See the movements let's start from here, right? A, B, C, resistance, 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 breakout of support. So we have resistance and support. Resistance, 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 support, support, support. All right, this is ABC, right? ABCs usually have what? They have support, supply or demand on them. What is this? Supply. What about this one? This is also another supply. We know that not all the supplies are valid. Okay, we'll get to there in a minute. Now, we have this resistance, we have the support broken out. Do you see any other supply here? Of course, we see another supply. There we go. This is another supply. If your supply area is a doji, you consider the whole doji as a supply. All right. Now, I will make the supplies blue. And for support and resistance, I will use another color, black. Okay. This one. Now, see right here, this doji broke the support area. So this is a point that the market decided to do the breakout. So in lower time frame, inside this, we would have seller's entry. Let's go to lower time frame. Honestly, I haven't checked this particular market before recording this session. I just started recording and my connection is gone. Okay, it's back. All right. In lower time frame, you will see some supply area just like that, which market touched and rejected. Okay. Now, we took the trade on this one, right? We will get to there. Okay. We're analyzing the market together. Now, okay. Now, what happened next? After this breakout, the supply caused a breakout. We got a rejection from the supply because it's causing the breakout. It's a decision point. And this was the last effort of sellers. So this is the last bit of sellers in the market. And you see, it ended with an exhaustion candle. This is some kind of exhaustion candle. It's not a beautiful exhaustion, but it is an exhaustion still. And if you look at this movement right here, it looks like a QM. You can clearly see the pattern, the signs of reversing market. A small QM and double bottom in bigger scale, last effort of sellers. And now we see a spike. The spike ended up in a supply area. The sellers got into the market again. And right here, we have this opportunity to take. If I mark this, you will see that this is a third touch breakout setup. First touch, second touch, third touch. We broke the market. In the third touch, we have lower low compared to previous low, which is one of the conditions to have a third touch breakout. And it's closing on a supply area. And not only that, we also have this big overlapping area. This is a big overlapping area, which I will make it another color, yellow. Okay, big overlapping area, broken. You know that when we break an overlapping area, it's like breaking a doji. Whenever we break a doji, we get retracement. Whenever we break overlapping area, we get retracement. Whenever we break a third touch breakout, we get retracement. This is a combination of setups to take this sell trade, which we didn't take because I wasn't in the market. Now, what else happened here? This spike, where it is coming from, okay? Usually at the middle of the spike here and in the beginning of the spike here, we have decision points. This is called decision point, and this is the starting point of the spike, which is the demand zone. These are the areas that the market basically reacts like a ping pong game. Okay, they just ping pong the price to each other from supply to demand, from decision point to decision point, from QM to QM. I'm sorry if I'm explaining this pretty fast. It is something that I usually do in every single video. If you're new and if you like this type of trading, please subscribe. I do not use indicators and stuff like that. I try to trade on naked chart, which has been working very well. Now, we have decision point, demand. Market comes to this decision point or sometimes comes to demand and then goes up again. See these reactions? These reactions from ups and downs are points of rejection. They are rejections, right? If you draw a common line between all the rejections, you will have common point of rejection. Isn't it beautiful? And the way we trade this, we combine different reasons. If I go to lower time frame, being multi-time frame, it helps us analyze the market in a way that we can get the best possible entry. We do not enter blindly. We combine different reasons. Now, this would be the entry point, okay, in our trade. There was a lot of good opportunities in this chart, in this particular chart. We took, which one? We could take this one, and we took also this one. Now, let me show you something. Lower time frame entries can be in the form of overlapping areas. It's so important to know which one is better, okay? Now, this is 1 minute chart. Now, look at this one. This is 1 minute chart, right? Where's the decision point? This is the decision point, right? This is the decision point. I'll zoom in. You see a bunch of rejections here. Now, we may have different opportunities in this market. If I draw this common line, this is the common point of rejection line. I'm going to add, I'm going to make this yellow and I will big ass line. Now, common point of rejection here. Spike, decision point, market's direction in our favor. Confirmed, double bottom, last effort has been visible. And now, this is a supply area which is broken strongly. If we have a supply area and it's broken strongly like that, next time price act like a demand area in this area. Now, we have supply becoming a demand or SPD right here. Okay, now how did we find the entry? We go to lower time frame. We treat entries as overlaps or visible supply or demand. Okay, visible supply or demand, just like this one. And market reacts from all of them. The way that the market moves is also important. If it moves in a compression form, it's much more stronger. Now, spike, correction, we can have another spike just like this one until the next supply area, which will be this one. Now, does it mean that we can enter jump in the trade when the market closes here? No, we want entry, we want confirmations to take a trade. See, sometimes we can, everything in the market influences the price's movement. This trend line, see, first, second, third touch of a trend line, it's closing exactly on the trend line, and then it gave us this candle. Now, market created another double top. So we see sellers influence. If we get this candle strongly, we may come to this zone right down here in a demand area, and then we proceed with going up. So we don't know what will happen. We react to the market's movement. We do not predict the movements. We react to the movements in the direction of higher probability candle or higher probability movements. This is how you analyze the market. Once you become professional, you will be able to do this with, just looking at the chart, like basically immediately analyze the market. Right now, I'm looking at this. I don't see anything significant here. Now, if I move forward, okay, I see a doji break right here. I see some kind of activities from sellers. You see double top, and then we have overlap, broke the overlap, reacted to overlap, coming down, ignored the doji. So strong sellers force. We have an overlap down here. This has been a respected resistance. Decision point somewhere here and here. Okay. Look at the market in bigger picture. In bigger picture, we're in a big ranging market. Now, I don't see any opportunity. If you see a momentum like this, with no gap between the candles, it means that the momentum is solid. And you should be very careful. In fact, I wanna take the lower demand. Let's go. I took it right now. This is the demand that I talked about. See, I saw that the sellers are exhausted, right? I didn't trust this one because the momentum is pretty strong. But this is the same scenario as the previous one. And this is demand. Oh shit, it's about to be disrespected now, but that's fine. We only take the higher probability trades. All right, so it preferred to come in, took this little demand zone, so then go up. I was expecting, let me be honest with you, I was expecting to be rejected from somewhere here because this is in spinning, inverted hammering. Usually inverted hammers, the whole thing is considered a demand zone, but this selling force is pretty strong that they push it down to this demand, and then we got the rejection, and now market will keep going where that is supposed to go. No gap between the candles, solid momentum. We never want to go against that kind of momentum. It went completely down to take the demand zone, okay? Now, voila. Now, okay, we got a third touch breakout. I want to take it pretty small because we have gap down against us. Remember, gaps are important. If you see big gap, this is gap, right? Candle closed here. Next candle started from down here. That's a gap down. It's in the favor of buyers. Even if you have a sell set up, it may come down. It stay come down for a while, and then the last seconds, they may push it up and close as a green one. If the setup is super strong, it may work, but in this case, we don't have the setup strong. I know it worked, but it doesn't mean that the setup is strong. I took it with small amount just to be sure that if this is going to be a losing trade, I'm not going to lose because of taking a bad trade. We never want to lose because of taking bad trades. Okay? Sometimes we may be unlucky and lose some good trades, but if that's a bad trade, we just take it small, right? If you're taking your trades with 20 bucks, take the bad trade with, I don't know, 5 or 4 bucks. Just like that. Another third touch breakout, but this is a weak one. I'm gonna move forward. Guys, just remember, it's impossible to become profitable if you blindly take your trades, okay? You need to analyze the charts. Do not be scared of markings. My connection is messy again. Do not be scared from markings. Mark the hell out of your chart. In my experience, all the students I have who they mark the charts, or they're not scared of being, marking everything. They usually, 90% of the time, they have better results compared to those who do not mark the charts. Okay, it's back. By the way, guys, did you see our freaking website? This is crazy, right? I haven't announced this yet, but this is a beautiful work. Shout out to one of the students who made this for me. And this is insane, guys. This is insane. It's not fully ready yet, but it will be announced, right? I like this is going to be beautiful. I just wanted to show you that. I haven't had time to announce it yet, but that's beautiful, and I will announce it. Big things coming, guys. Now, what happened here? This is the first chart that we have been analyzing. Now, what is this? Why this is happening here? This is some kind of rejection. See all these rejections? There's a reason for that. Okay, so we created this leg here as well. Now, market started to go to indecisive mode. You see, right now it's reacting from this demand. It almost broke the demand, but now we cannot decide what the market is doing. We just need to wait. We have two areas which are important: this supply and this demand. Once we detect the market's direction after touching either of these, we can decide. Or maybe some other new supply and demand is created in this chart. Right now, there's no significant supply and demand. Then we can decide. First, we need to know where the market is going, and then we find the setup. Okay, now look, we have common point of rejection right here, right? Do you remember this one? Common point of rejection. This is the same, common point of rejection. But in this one, there's a difference, right? These two common point of rejection, they are different, because in this one, we knew the market's context. We knew where the market is going, right? We knew that this is bullish. It's going to go up. We have lower time frame entry from the decision point. So it has strong reasons to, react from this. But now this one, it reacted. It would be a winning trade if I was entering here, right? But it's no context. We don't know where the market is going. If we were taking this trade, it worked, but it would be an unsure trade. Okay, these are the things that usually beginners ignore, and it's not their fault, because lack of experience and not knowing the correct way of studying the market. If you want to become a student and start learning in a proper way, you can contact the first link in the description and join the mentorship in case you want to learn. Now, I'm going to just look at the other pairs. Also, if you don't see good opportunities, do not try to make up reasons for yourself, right? Just take the trades if there are any. If there's no good opportunity, do not try to just fight with the market and try to take some trades that are not good, okay? So now, in this market right here, see market has been coming down. You see some areas, and market at some point, see low, lower low, higher low, higher low. At some point, market refused to create lower low. So what is trying to tell us, right? Here we have a fake last effort, and then the market started, sellers showed up again after this. If we were seeing this movement after this, it would be the spike, okay? It would be the spike, and then we could go with the buyers. But right now, we don't know what the market's doing. They are deciding where to go, okay? So there's no setup. Again, third touch breakout. Market's context is bullish. This is a resistance area. Third touch breakout. See, selling here would be risky. Why? Because of gap down. Strong momentum, right? People may sell here and lose, and then they start complaining because they do not consider the context. Now, the last trade we took, which was 200, which was exactly the same scenario, but it was a winning trade, and we took it a small trade because we had gap down. Just go back and watch that area again, and you will see what do I mean. Now, I want to start this session here. I hope you enjoyed. We took solid trades in this session. If you're interested, just join the first link in the description. That's the official Telegram channel for updates and everything about the events, free events, you know, everything, mentorship. First link in the description. Thank you for watching and peace out.